Welcome to the Real and Real Estate Podcast, your go-to show for real estate success. Whether you're an agent aiming to crush it or a buyer or seller wanting the inside scoop, we're here to deliver expert advice, insider tips, and the real talk you need. Each episode, we chat with top industry pros to give you the facts, strategies, and inspiration you need to thrive in this business. Let's dive in and make big moves together. Hi, welcome back to the Real and Real Estate Podcast, where we talk to the experts to get the facts, dispel the myths. And today we have Tom Schmidt with us with Jackson Henry Mortgage. Tom's been in the business a long time, and he's going to tell us a little bit about himself. And then we're going to jump in and start talking about down payment assistance, which I think is an excellent subject for this time in the mortgage world. So welcome, Tom. Thank you.
Well, thank you. I'm glad to be here. I'm honored to be here. In fact, I'm quite familiar with your podcast, Gene, and you're very successful at helping people know about the business. And so I hope I can be of value.
You will be. So tell us a little bit about what have you been in the business, like 20 something years or longer?
I have. I started my real estate career for about 10 years, actually selling real estate, which I think is a good transition into what I'm doing now, obviously the financing world. I've had my mortgage license or been in the mortgage industry now going on 26 years. I had not to be licensed the whole time, but most recently, the last 15 years licensed.
Well, I like the fact that you have real estate as a real estate agent background because you can empathize with what we go through.
That is 100% correct, and that is the only reason I brought it up. I kind of know what realtors are looking for, and I try to deliver that.
That's right. Well, now you are a co-owner, correct me if I'm wrong, in Jackson Henry Mortgage, correct?
Yes, ma'am. I am the co-owner of the company called Jackson Henry Mortgage, a local mortgage company in the Woodlands. We serve all of the state of Texas, also Louisiana, and the state of Florida as well.
Oh, Florida. Okay. Wow. All right.
Yeah.
Well, those business trips would be fun, wouldn't they?
They would be fun. Yes. I haven't had any of those. Last time I went to Florida was actually acquiring my license there, which was 15 years ago.
Oh, wow.
But it was just a lot of studying for exams, so I didn't really get to enjoy the state very much.
Well, I want to talk about down payment assistance today. The mortgage rates are going down. I think last Friday I read it was like 6.65, which is coming down each week a little bit, which is wonderful. It's what we all need. But in the meantime, people, I think, as you know, got spoiled with 2.5%, 3%, 4%. It's not going to happen again, people. Don't wait for it. You got to buy your house now. If the rates go down a little bit, you can always refinance. But some people are just not ready to pull the trigger, so to speak. And I think part of that is they don't think they have enough money yet to buy the house. I've got to save at least 20%, which is not true. Not always anyway. There are a lot of other programs out there, but there's also down payment assistance, which can help first-time home buyers. There are grants. And one thing I want to mention before I forget, being a first-time home buyer doesn't always mean this is your first home. So I'm throwing a lot at you here, Tom, but why don't we just start talking about down payment assistance, who could qualify, what it means, how you could get it. Let's go.
Perfect. And you touched upon interest rates, Gene, and there has been an up and down movement. Expectations towards the end of last year was that we were going to see quite a drop in rates, somewhere close to the mid fives. That didn't happen. And now there's some talk and expectation that are out there that rates will remain kind of what we call flat. So not a whole lot of expectation of movement downward until we get somewhere past the middle of the year. And at that point, we in the industry are still hoping to see something in the mid to high fives. If that should happen, it'll be quite helpful. But we call it anomaly, Gene, when we saw the rates back in the COVID years, 2 and 3 and 4 years ago, when we dipped into the high twos and the threes. That's probably not going to happen, maybe ever, but for quite some time. Right. In terms of down payment assistant products that you had suggested, there are quite a few products out there, Gene, and there's usually a trade-off between, something given to help a borrower, such as a down payment. The trade-off with that is typically a little bit higher in interest rate. Not always, but that's a common factor that we witness with products. But there are many products out there that are designed to help, as you said, first-time home buyers, even second-time home buyers. The whole purpose is to help them get into a home with either providing by way of down payment or closing costs or both. So those particular products, Gene, are driven by credit scores or income. There are products out there, Gene, that have income limitations on them. And that means if you exceed a certain amount of income, you're not going to qualify for that down payment assistance product. There's also products in which there is limitations to where you live.
Really?
And believe it or not, some of those products, Gene, are based on the address that you currently live in that you're moving out of, which doesn't make a whole lot of sense.
No, it doesn't.
Yeah, other than the motive there is to try to help someone get out of a certain part of the city, state that is not doing well and helping them move into a more flourishing area. Okay. So there's a lot of different products. Some of them that are more familiar, 100% financing for a VA loan. That means those veterans that have served in the country and have compiled eligibility, we help them, the government helps them with their down payment, and that is called 100% financing. Also,
I just closed a deal, one of those deals.
Say that again?
I just closed one of those deals for a veteran, and I think they just, I'm so glad that program exists for them.
Yeah, they certainly deserve it. And yeah, veterans have fought for our country, and they're quite deserving of it. There are also some products, Gene, like USDA, which is 100% financing. And that is based upon the property where it's located, usually designed for more rural areas. Okay. There is income limitations on USDA, but that also, if you fit into that particular mold, you also qualify for 100% financing in that product.
Wow.
So there's several. There's T-Shack. There's TDHCA. I'm sorry. There's T-Shack. Those are all FHA type of products and programs that allow for either a help with a down payment or help with closing costs or both. Something called the SEP 5-star. That's best for first-time home buyers, as you mentioned earlier, and those with lower credit scores. Typically, Gene, we run into credit scores being, 620 or above for any of these products. Some 640, some of the products require 640 FICO score. VA does have a minimum of a 580 FICO score, so that's probably the lowest FICO score allowed for 100% financing.
Okay. What if someone has, oh gosh, I have so many questions. I'm not sure where to start. Let's talk about credit scores real quick. I know you mentioned 620, 585. If someone has a credit score below that, should they just I think they should contact you right away anyway, so that you can tell them what they need to do or how they need to get to where they need to be to buy a house. Do you agree with me on that?
Yeah, 100%. You nailed it. So we have a service that the company that provides us with the credit reports, they provide a service that we're able to communicate with them, ask them what would be involved to achieve a certain credit score. So let's say a borrower has a 562 credit score. And so then we can directly ask them, what will it take to get that credit score to a 580 or a 600? And they run a simulator, Gene, right then and there. And they tell us, hey, if you pay down this much on this credit card, pay off, this balance on this credit card, then your scores will hit that minimum score that you're targeting. So it's a very, very, very good way for us to be able to begin to work with a home buyer prospect to raise credit scores. I want to mention one other thing about credit scores. We and any other mortgage entity or bank, anyone providing mortgage financing, we all utilize the middle score. So there's 3 scores typically to a borrower. And that means if those scores were 620, 600, and 580, as an example, the 600 score is the score that we would utilize to determine product and interest rates.
Okay.
So when we're using that simulator, Gene, we will ask what will it take for that middle score to achieve a certain number, numerical value, so that we can progress with financing.
So you're basically giving them a roadmap to being able to buy a home.
And you nailed it again. That is exactly what we're doing. It may be instantaneously. There's a lot of borrowers, Gene, that I'm able to deliver this sort of information, and they have the ability to pay down the credit cards with money that they have saved. And then there's, a percentage of them that don't have the money to pay down those credit cards, and it might take them 3 months or 6 months or 9 months. One other thing about credit scores and credit reports, there's a lot of competition, Gene, right now amongst mortgage entities. So we're coming out with a lot of new products again.
Oh,
and
great.
yeah, there's a lot out there that enables borrowers to qualify even with 1 day out of bankruptcy, 1 day out of foreclosure. Yeah, which is the wow
That's
factor.
a lot different than 4 years.
Yes. And that I understand why you said wow, because we had a little bit of that back in 2007 and 8, and it didn't turn out so well for the mortgage entity. No. But we're going down that road cautiously again. Our desire is to help people get into their homes and stop paying rent. Obviously rent is exceeding, or is increasing, I should say. And it's a tough market right now.
Well, oftentimes your rent amount exceeds what a mortgage amount would be. So if you can afford to get a down payment assistance or whatever you need to get into that home, you're going to be much better off. Plus, you're building equity. So you've got something to show for it. When you walk away from that apartment, you've got nothing.
That is absolutely true. My father used to always tell me, when you purchase a home, it's a forced savings plan. You're forced to make the payment, and each payment you make, the balance reduces, and most often the value increases. So you're getting a sort of a double-edged benefit there to your advantage of building equity.
Absolutely.
So definitely advantageous to renting. We in the industry like to put out advertising that says why rent when you can purchase, exactly for the reason that you just mentioned. Rent is increasing, and most often you can, if you have the ability to buy, you're going to have a lower payment than you would in renting nowadays.
Now, I've heard something about grants. Are there grants out there that help people with down payment or closing costs?
There are, Gene. I just closed a loan recently. It was a conventional loan. It's called a Home Ready. And they gifted the borrower $5,000 at closing.
That's a nice gift.
It was beautiful. It was directly applied to his down payment with no repayment required. So he received a gift from the state of $5,000 on this. That was a Home Ready conventional loan, and the seller paid some concessions in that particular scenario. So, as a realtor, if you have the combination of a gift at closing towards down payment, the seller providing concessions for closing costs and prepaids, it allows a buyer sometimes to get in at a very low amount of money.
Yeah, and that's worth it for sure. So what kind of rules or what kind of person could apply for a grant? Or are there just too many grants out there to be a generalization?
Yeah, there's a lot of them. And again, they're tied to your income. They're tied to your credit scores. They're tied to your zip code. So when I'm speaking to a borrower or borrowers that are looking potentially as a first-time home buyer, the first thing I want to find out is, what are their credit scores and what is their income? Because then based upon their goals and ways of financing, I can help them achieve whatever it is they're looking for. If it's a conventional loan and a buyer is purchasing a home and he says, I have got 20% to put down, I just want the lowest interest rate out there. My motive is entirely different because I'm in a mode at that point. I want to provide this buyer the lowest possible rate
Right.
that I can deliver. And you might say, well, why doesn't everyone provide the lowest rate? What's unique to myself and my company is we have 28 underwriters, and interest rates, Gene, are sold or delivered like a loaf of bread. I always say, if you go to HEB, a loaf of bread might be $1.67. If you go to Kroger's, that same loaf of bread might be $1.57 or $1.75. But it's the same with interest rates. Different underwriters offer different rates, and it's my job to secure that product that is most in need of that borrower, whether that's the lowest rate or a down payment assistance product, such that we're speaking of a gift or a grant, or a specific term. 40-year amortization has now come about, and that's for the purpose of helping folks spread their loan amount over a larger amount of years in order to reduce the payment. So again, there's a lot going on in the way of financing right now, all with the desire to help people.
So I know a lot of people will just go to their bank wherever they do their banking and ask about loans and interest rates, and that's as far as they go. And there's nothing wrong with that, but it doesn't hurt to if you insist on talking to your bank, you also should talk to someone like you, Tom, because you have so many different programs and so many different options. And they're not doing their due diligence if they just go with the first person they talk to, in my opinion.
Gene, thank you. Very well said. I'm going to give you a scenario. I worked for a local bank in this city of Houston. I was a production manager for several of their branches for the mortgage division and was working there for a short period of time. And the rates jumped up a bit at a certain particular day. I noticed, the next day they were up an eighth or percent higher. And I was sort of surprised and asked the reasoning behind it. And they had too much business coming in at the time and not having the ability to service it in the way they thought. They increased the rate as to turn a spigot and to stop the volume from coming in. So
Ouch.
I was very surprised with that. And then I found out that happens. So everyone's not looking for more business at a certain time, but the up and down movement that you see in rates, the fluctuations, is often dependent upon supply and demand. So there's other important ingredients that allow for a rate to move up and down, and that's the influence of the federal funds rate, economic conditions, global conditions, certainly inflation, as we've seen recently as a driving force for the movement of rates upward or downward. So there's a lot there.
Well, I think one thing people need to take away from this is don't assume you make too much money for help, or don't assume you don't make enough money to buy a house. And you should definitely, I won't say shop because you don't want to go around to too many different places, but don't assume the first rate you get or the first person you talk to is going to give you the best deal. You need to talk to someone like Tom.
Thank you. Thank you again. It's 100% absolutely true. So again, because I have so many underwriters, that's exactly what I have the ability and absolutely do with any particular buyer. Is my goal is to find them the lowest interest rate and or a product. Without deviating into a whole nother subject here, Gene, the products that we have, there's so many borrowers out there that cannot prove income, as an example. Well, we have many products in which you do not have to provide income at all on the loan application, because we're giving you financing based on your high credit score and your down payment of 20 or 25% or more. So for self-employed borrowers, there's just a lot that the public is unaware. And again, it's some of those products, it might be a slightly higher interest rate. One that I'm thinking of, interest rate's going to fall in at about 7.375. So not even a full percent higher than the best rate out there for the best consumer's picture, but slightly higher to accommodate for no proving of income. And again,
Sure.
the difference between those products today, Gene, in 2007, 2008 is at least with those borrowers, we're asking for higher credit scores to mitigate the risk.
Sure. Well, let me ask you another question I just thought of. Let's say someone, you're helping them, they have this program where they're getting down payment assistance or 100% fund, whatever. And their interest rate is 7 point, what did you say, 7.8 or whatever, as an example.
7.375, or yeah.
Well, and then let's say the interest rate by October is down to 5.7 or whatever. If you're participating in one of these programs, are you able to refinance to get a lower
Great
rate?
question. Great question. Absolutely. There are not any prepayment penalties any longer. Those days
Okay.
are gone. At most, there's a couple products out there, Gene, that might have a 6-month prepayment penalty.
Oh, that's not
That's
bad.
about the
That's
longest
nothing.
out there. But other
Yeah.
than that, there's a real benefit when rates drop in causing a desire of a refinance. And for refinances, if you're lowering your interest rate, you're lowering your monthly payment as well. You can lower your interest rate by a lower term. You might have a 30-year term, and you say, "Hey, I have the ability to spread my payment out over 15 years." The monthly payment in that case is going to be a little higher because you're taking that loan amount
Right.
over 180 payments versus 360, but your interest rate is lower. Therefore, your balance is going to reduce much quicker.
Faster.
So there's different terms. There's adjustable rates. Gene, are not very marketable right now because
No.
they're simply not marketed at a much lower rate. So a buyer says, why should I have the risk of a rising rate on an adjustable rate mortgage to save $40 a month, as an example?
Right. Right. Well, and this is another reason I think people should not be afraid to go ahead and buy a house now at whatever interest rate is at the moment, because you can refinance and start building your wealth and your equity now, refinance later. I mean, to me, it's a win-win.
Yeah, and when you refinance, um, we are trying to roll any and all closing costs into the loan amount. So our goal is
Perfect.
always to get someone to closing on a refinance with minimal amount of money, maybe $500,
Perfect.
maybe $1,000. But they also skip 2 payments, Gene. So if they refinance in the month of April, as an example, I'm going to ask them not to make their April payment because we'll be refinancing that loan, paying off their
Right.
current loan in April, and they will not have a May payment. So if their payments are $2,500 a month, right there, they're keeping $5,000 in their pocket. So that, accompanied with a lower monthly payment, is a win-win, as you just mentioned.
Absolutely, absolutely. Well, we've been talking about quite a few things, and I know we're going to run out of time in a few minutes, but what have we not talked about that you'd like to bring up, or something you'd like to reiterate that we did talk about?
Yeah, again, I think the focus for all borrowers should be, kind of trying to figure out what it is that they're looking for in the way of financing. And that is the reason I ask a lot of questions up front with any potential prospect, is I want to find out what their goals are. And then I kind of want to move them in a direction of a way that I think is going to be very helpful to them. And again, not only rates, but products are really important, Gene. As an example, I have a new product that I was able to start offering today, and it's called asset utilization. And I'm going to give you an example of what that is.
Okay.
So with this particular underwriter that I have, Gene, they utilize whatever investment portfolio that might exist. And let's just say you have a 401k with $1 million in it. They take that sum of whatever it is in your portfolio, and they divide that by only 5 years, 60 months. So in this example that I'm going to describe, if there's $1 million divided by 5 years, that is equal to $200,000 a year, or call it $17,000 a month income. So that is asset based. We haven't had these
Oh, wow.
products. So now, because they have a portfolio with $1 million, now they immediately transfer that into an income, a monthly income of approximately $17,000 a month. So now you're going to be able to qualify with a much larger debt to income ratio because you're given income based on your asset of $1 million. Those
That's
products
great.
haven't been around, and they're wonderful because it again
Yeah,
allows the borrower to get into a house or
that's
home.
fantastic.
Yeah, so
Wow, there's so
products are
much
really
out there to
important.
know.
Yeah, there really is, and it's very important that the mortgage originator, the loan officer that you're working with, the mortgage company that you're working with as a borrower, that he explains the different options that are out there, and that he's educated with the different products. And there are some mortgage entities that just don't have a variety of products. They have a what we call a box of 3 or 4 or 5 products, and if they can't deliver something to help the borrower, they're going to say no, thank you. But someone such as myself and my company, we have, again, 30, 20, 30, 28 or 30 underwriters that are always trying to come up with different products to help borrowers get into their dream home with their dream financing. So products are really, really, really important.
Well, we could talk about this forever, but the bottom line is you need to give Tom a call. And if you're thinking about buying a house, and find out what's available to you, because there are more products out there and more different programs that we can't possibly cover in just one conversation.
Yes, thank you again. So yes, there's the benefit to the buyer if they come my way is DPA that we just spoke of, down payment assistance products that are going to offer either a gift at a closing to be used for down payment and or closing costs, and then a variety of different products that allow you to qualify for different reasons, whether using assets, whether we're allowing for a higher debt to income ratio, or we're not going to verify income at all, as I mentioned. And again, interest rates, I can search for the lowest rate at any given time and make sure I deliver that to a borrower to put them in the best possible position.
Fantastic. Well, Tom, tell everyone how to reach you. How can they reach you if they want to talk to you about this?
Great question, Gene. So cell phone number 832-928-7204. Tom Schmidt. I am the co-owner of the company Jackson Henry Mortgage. So as an owner, I originate loans all day, every day, because I'm wanting to help people get into their homes at the very best case scenario. So call me, text me. My email address is tom@jacksonhenry.com. And I would love to earn your business. I would love to help you the best way that I can.
And your website address if they want to check out your website?
Website address is
Jackson Henry.
www.jacksonhenry.com.
Okay. All right. Give us your phone number one more time before we leave.
832-928-7204. Gene, I want to make mention of that phone number. So I know you, I'm one of those that answers phone calls. So call me in the evening at 8 o'clock, call me in the morning at 7 o'clock, call me on a Saturday, call me a Sunday. If I don't answer the phone, I see that there's a missed number and I call you back.
Perfect. That's the way it should be. Well, thank you so much, Tom, for coming on and giving us an overview of this, and how you can help people is just amazing. There's so much out there. Thank you.
Gene, it was totally my honor. Thank you for the opportunity. And let's go get them and see you at the closing table.
Wonderful. And maybe we can come back and talk about some more programs in depth later on.
I would love to.
All right. Thanks, Tom. Thank you for tuning in to the Real and Real Estate Podcast. I hope today's insights have inspired and empowered you. Don't forget to subscribe, leave us a review, and share the podcast with anyone who might benefit. Have questions or a topic you'd like us to explore? We'd love to hear from you. Until next time, stay informed, stay inspired, and keep moving towards success.